Hey, good afternoon, everyone. Okay, it's about 2:45. We've been kicking around and digesting the numbers today from the USDA, and we'll take a look at these. And I'll just warn you, I'm not trying to kick your dog. I'm not trying to, do anything mean. I'm just giving you what the numbers are because they're really not very pretty, and I just want you to be aware of it. Okay, so um, we'll come back to that here in just a second. Let me pull this back up. Okay, so this video might be a little bit longer. I'm going to go through the USDA report, and then we're going to jump into the charts, and then we'll just talk about kind of what that means and what it looks like. But overall, here's what the USDA did today. Okay, they moved some numbers around, and what they did is they increased yield, but they decreased harvested acres, and then they increased demand ever so slightly for a small increase in carryout. So why were we down? Well, it's because the increase of this carryout was more than what the trade expected, and then they also didn't get very aggressive with the size of the South American crop, and a lot of people will beat them up over that. But honestly, why would they? If you just look at our own weather and our own yield situation from this year, what you see is we had some devastating weather, particularly for soybeans, but we keep increasing the yield. So if you look back to before the weather happened, we were sitting at a 52 bushel per acre estimated yield. And then the weather hit and the USDA started knocking it down. They knocked it all the way down to 49.6 from 52. And our carryout came down significantly, right? And then what we did is today we raised the yield and increased abandoned acres just a little bit. So even with the weather that we had, our final yield wasn't that far off of what they originally thought. And so in South America, why would they do anything any different? Sorry, let me send this to voicemail. So why would they do anything different with South American production until we have more known information about devastation? It actually kind of makes sense. Now, back to corn. What did we do here? We decreased acreage. We lowered harvested acres. We therefore increased yield because you have the same amount of bushels, and that net increased the crop size ever so slightly. We increased demand ever so slightly, but yet we still increased the new crop. So this isn't in and of itself all that bearish in our opinion, but what you have to do with these numbers, okay? If you look forward to the 2024 crop, and I'm just going to type 2024 in here. If you look forward, what you have to do is move this ending number to the beginning stocks to next year. And then you have to plant some acres, you have to harvest them, you generate a yield, and you make some assumptions about demand. And if you keep things relatively consistent from last year to this year, we are sitting at, even with a 173 yield, which is below here, we're sitting at a near 3 billion bushel carryout. If I put the yield the same next year as this year, which would be another record, we are sitting at a 3.3 billion bushel carryout without doing anything else, okay? I guess I should make this the same number, 14565, there. So 3.1 billion bushel carryout if we don't do anything with acreage. So that means that we have an acreage, I'm not going to call it a battle, we're going to call it an acreage massacre, because what we have to do is get rid of acres, all right? Look at beans. Remember, most people that are growing a significant amount of corn, if they're going to shift mostly to beans. Yes, there's some fringe acres that can go to some other things, but for the most part, we're going to shift between corn and beans to some extent. So if you take 4 million acres off of the corn crop, and you move 75% of that to the bean acres, okay? So I'm just going to add 3 million acres to what we ended up with here. And I think we got to go up to a 52 because that's where we started with our bean crop last year. You got to assume you're going to have it. And you add this to the final acres down here, you're at almost 600 million bushel carryout for the soybean crop, assuming everything else stays the same. Now, of course, demand can come in, weather can come in, lots of things can change here, but this is what the market is wrestling with. You're looking at a bean carryout that may double from where it is, and you're looking at a soybean carryout that may increase by 50% from where it is today in one year. So you have a massive problem coming, because what if we don't shift 4 million bushels or 4 million acres and we shift only 2.5, and we hit a yield of 184? Well, now you're talking into the mid threes for carryout. So that's too much. The market's not gonna try to rebalance this in some way, and I don't know how traders are going to do that. They can beat the price of corn down to where nobody wants to plant it. They can hold beans high enough until enough people decide they want to plant it. They can rally some other market like cotton or wheat or something else that that farmers may choose to grow over both, or they could take them both so low that we just want to take them out of production. I don't know what they're going to do, but the bottom line is these numbers are scary, because then you look beyond that, and why do we need to be planting anything, to be honest? So the market has downside risk. That's really the main thing that should be coming across here, is the market's got downside risk. It will not go straight there. Yes, it will have a rally in it somewhere, and you'll have some opportunities to sell it. But the only thing that is even maybe a little bit bullish, and don't go claiming victory here on what else I'm going to say, because I think we have a bearish tilt here moving forward. But anything that's even remotely bullish here is the fact that what we talked about on Tuesday or Wednesday before I left is holding true, which is this Fibonacci cluster here on new crop soybeans, which is between the 61.8% retracement of the May to July rally, which is this level right here. This is also the 1.382 and 1.618 extension of the decay that happened from the top here. So if you go from here down to here, and then you snap from to the top, the decay down to here counts down to here, so you down to this level. So now you have this Fibonacci cluster, and we did find support here. We have a long lower shadow, and we came right back up and held $12. I think that's significant, and maybe what that's telling you is that we've temporarily run out of sellers. That's a possibility. I don't think it's a tradable low. I don't think it's a great sell signal, and I'm not claiming that at all. But it is a possibility that we've temporarily run out of sellers here, and all of the bad news is currently priced in, and now we need to go find where selling might reemerge, or some new type of fundamental comes into play, and then we can take it lower. I don't know that that's the case, but that is a viable reading here. But that's it. I mean, we're still down today. We traded a massive trading range, right? And we ended lower. We have a bearish engulfing day. It's not a great setup by any stretch of the imagination, but we were able to hold some of these lows here. Old crop was a little bit weaker, and this makes sense because if we're looking at a surplus coming, then what value do we have? You know, the adage, the last bushel needed is infinitely more valuable than the first bushel not needed. So we have a race here to the bottom on old crop because the bushels aren't needed anymore, right? We got plenty of them. And if South America, I mean, God forbid it gets bigger, we may really start to come lower here again. Now, if you notice the difference between old and new crop, right? New crop held these levels, old crop has not. So in this contract, we're lower. The only thing that's even remotely decent here is the 12. What comes after a 12 is a 13, which would be an intermediate buy signal like the one we had back in May before we ignited the rally. But this old crop contract has done more than take away that rally. It's now extended and pushed to new levels. So I don't think that that's a bullish setup yet. We need to see something different materialize, but we understand why and what's going on with this market fundamentally in order for it to do what it's doing. So I'm not going to do anything too drastic, but if we do want to get something put on, that's fine. We just want to own calls if we're, if we pop back up just a little bit. And you know what, Goofy, it would help you if I showed you old crop beans instead of old crop corn. No difference here. It's the same analysis because the charts look very, very similar. Unable to hold this cluster, holding near the 61.8. We just haven't taken the whole rally out in beans like we did corn. So that's the only difference, is corn's just a little bit weaker. But it does generate a buy signal Monday unless we have a big reversal and come up out of here anyway. So on Tuesday we should see a low trying to form in the corn market, and then we might look similar to this setup back here. One thing that is pushing that is if you start reading people and you just listen to what they're saying, everyone is overwhelmingly bearish. We are now completely focused on the downside because these numbers are scary. But we're so focused on the downside, it kind of feels like everybody's on one side of the boat. So it makes me hesitant to want to jump in and sell it. And in fact, that's what a lot of these indicators are telling us, right? Is that we're starting to see a little bit of divergence among all of our oscillators here. So I think a temporary low or a short-term low is closer than we think. And it may already be in place, but we'll have to see how the market reacts and how traders come out of the weekend. Okay, now let's look at new crop corn. Again, like soybeans, we sold off, but we were unable to get back up into this range right in here. So old crop corn or new crop corn looks terrible. This market is just working itself lower. There is no buy signal here. It's just bearish. So being hedged is a good place to be. If you're looking to just sell it today, I think what you might do is if you have any strength on Tuesday, you have to make a decision. If we're below these levels right in here, 490, 491, I think you go ahead and sell it, put calls on if you're worried about it or if we start to trade back up. Otherwise, just get short futures and look for an opportunity to buy it cheaper or make some adjustments there later on. It's really hard to trade from this spot. It's been hard all the way down here. As we've definitely had the ability to pop out the top side, but I guess the last couple of weeks the market has decided to go the opposite direction. All right, wheat. Wheat's the only thing that's holding in there, right? It was also the only part of the report that was somewhat bullish. We do have a little reversal here, shrugged off the weakness from the corn market. So if we can get wheat going, that might help corn. That's your best bet. But wheat can't really get going until it is back above the 650 level on the March, and July looks almost exactly the same. In fact, the carry in the wheat market is really light. So we need to get this thing up above the 650 level here in order to ignite any kind of a rally. Maybe that'll happen, maybe it won't. It all kind of depends to me on what corn decides to do, but 490 is the level that we're looking at, which would also be today's high. If we can punch up through that, maybe there's some hope for something higher. If not, then hedged is where you want to be. And the same is true for beans. Okay, I know that seemed like a lot, but overall, not a super bullish report. Maybe we found a short-term low if traders have decided that it's already priced in, that there's not a lot of meat left on the bearish bone here. But for today, lower we look. Remember, there is risk trading futures and options. You should only do so in light of your own financial condition. Hope you guys have a really terrific weekend. Markets are closed Tuesday or closed Monday. They'll reopen Tuesday, and we'll be back with you on a video Tuesday, Wednesday, Friday next week. Have a great day. We'll talk to you later. Thanks.